Key questions to ask when searching for a contracts for different CFD broker. Keep in mind that most of the dealers you will interact with are essentially CFD salespeople and not actually traders. In fact, some have never as much as made a trade in their life. Thus, they are more likely to be interested in maximising client take-up and sales numbers than your personal interests. So it pays to ask the provider a few key questions. Whilst not all will be relevant to your trading style at this stage, they may be as you advance, and there is space for extra questions you may have. Questions to ask would include: how long has the provider been operating as a CFD provider? You would like a reliable, dependable CFD provider, so try to research the reputation of the broker in terms of how long they have been operating for, who they are backed by, and their standing in the sector. At a minimum, you should ensure that the broker you are looking to trade with has financial stability and is properly regulated. What is the provider's core business? In practice, you really want to be dealing with dealers who have expertise in their products and services. Some CFD providers operate as part of a larger investment house or foreign exchange provider. Depending on what you need from your CFD provider, you have to consider if they have the CFD expertise that you require on a wider product offering. What are the charges? Like dealing with stockbrokers to trade physical shares, you will also incur expenses when you trade CFDs. Commissions and charges vary considerably from one provider to another, but as a general guideline, some CFD providers charge $10 minimum commission or 0.1% as the standard rate. How much do I need to open an account? The amount of money needed to open a trading account differs from one provider to another. Some providers also offer credit facilities, but in such instances, they will usually require financial and credit checking and proof of your financial stability. Does your provider use the market maker model, or do they trade direct market access DMA, CFDs? If you decide to open an account with a CFD provider, you should know what the CFD provider's business model is. That is, how they structure and price their CFDs. There is no best model here, although certain trading strategies are better suited to one over the other. The shorter your time frame for trading, the more you'll need to rely on a DMA CFD provider. But if you wish to trade over longer periods of time and need access to global markets, then a market maker might be more appropriate. In practice, if you're serious, you would ultimately want accounts with both types of brokers. Does the provider offer discount for volume trades? Some CFD brokers offer discounts off regular commissions if you are a frequent or big volume trader. It pays to ask your CFD provider what discount arrangements they offer. Are the margin requirements competitive? To open a trade, you need to deposit with the CFD brokerage company a margin amount, which will be a percentage of the total value of the CFD trade. So for instance, rather than only buying 500 shares, you could deposit the margin amount and acquire exposure to 5,000 shares. The ability to trade on margin is one of the biggest attractions for you to trade CFDs, and ideally, you want your provider to provide an Excel spreadsheet or web page listing every market they offer and the margins required. In general terms, margins should be competitive, but other factors like competitive bid-offer spreads and good execution are more important unless you wish to remain permanently over-leveraged. How much is the financing charge? When you trade CFDs on margin, you are technically borrowing money from your CFD provider. Therefore, you will be charged what is commonly referred to as a financing charge for the total amount of your CFD holding. Most CFD brokers use the current cash rate plus maybe 2% or 3% as a financing charge, which is computed for as long as you're holding an open CFD position. What CFDs can I trade? One important advantage of trading CFDs is that it not only allows you to access to diverse markets such as individual stocks, indices and foreign exchange, but it also gives you access to other markets outside the UK. However, Not all providers will quote all the different markets, and certain brokers and platforms will be better than others in terms of what they offer. So check that the markets you are interested to trade are in fact available on the trading platform you choose to go with. How small is the spread that they offer? Make sure that the CFD providers offers competitive spreads for the markets you wish to trade. The bid-offer spread is the most significant cost of trading, so make sure to compare the spreads of a few different CFD brokers to ensure you are getting competitive pricing. Does the provider offer risk management tools, i.e. stop-loss orders? Stop losses are an essential tool for successful traders, even more so when trading on margin. Make sure that your CFD broker is able to support the most basic of risk management tools, such as normal stops and limit orders. If you need guaranteed or trailing stops, check to see whether your CFD provider supports them. Make sure to check the cost of placing guaranteed stops if your broker offers them. Where does the provider keep client money? The law sets down some requirements for how CFD companies deal with their clients' monies. Not all CFD providers handle and use client money in the same way. Some providers give your money more protection than others, so make sure you find out what a CFD provider's policies are, and in particular, whether the CFD provider keeps client monies in a segregated account. What happens to your money not allocated to open trades? Some CFD brokers will pay interest on the free cash in your account, as long as the money is not tied to cover any open trades.